Afternoon all, how are we all doing? Sorry I'm late. I've been doing stuff. Stuff. How is everybody? Firefighting? Feels like it at the moment. Absolutely firefighting. Everything. Indices, FX, everything. Just firefighting. This month is a firefight. Thank you very much, Tom. Evening. Tom, here, have some money. 5 Australian dollars. Thank you very much. I should buy myself a beer or coffee, or I don't know what the exchange rate is with the Aussie dollar. Hang on a minute. 191. I'll buy myself a beer. Thank you very much. Thank you for that, Tom. Afternoon, evening, wherever you are. Danny, afternoon. Jimmy, Baggy, Kennelly, Peter, Fletch, day trader. How you doing? Paolo, Jimmy. As a newbie, I have my first crisis in mean reversion strategy, getting squeezed on the pound CAD, 7% drawdown. Any advice? Don't want to add more positions, as lots of news this week. That's exactly when you should be adding positions. Pound CAD. How are you in 7% a drawdown on the pound CAD? I mean, I've only got one long on the pound CAD. If you'd have taken that, you would have 2 positions on and just about to enter a third. There's no way you should be anywhere near 7% of drawdown. Nowhere near. So I don't know how you're in 7% of drawdown on that. Where's your average? So if your average, the idea is obviously you want to keep your average price within, I mean, ideally within an ADR, but if you're within 1 to 1.5 ADR, you're literally waiting for a 1 push. Yeah, so if the market moves down and it doesn't profit take, eventually it will profit take, and that will generally be in the form of an ADR hit or more. And if it's more, it'll be 1 or 2 days ADR, which is the whole purpose of position trading average, is to try and keep yourself within an ADR, because all you need then is one up day. Yeah, if you get down day, down day, down day, down day, and it does 1 recovery day, you're out. That's it. You shouldn't be in 7% of drawdown, though. That must be over leveraged. Unless you got in back here somewhere, maybe. If that's the case, then you're kind of 480, 4 ADR. I don't see how you can be in 7% of drawdown. Send me a screenshot in Telegram, and we'll have a look. Neo, afternoon. Virginia, Derp, Yarp. Haven't seen you for a while. Andres, Marco, Birch, Cadien hit weekly level a few minutes ago. Did we get a weekly alert? No, we didn't. Mine didn't. 128 off of 213. A weekly level. Yearly level, that is. So that's CAD yen last August. So yeah, we're up at that area we identified for potential resistance on the CAD yen. So could well get a nice little pullback from this level. We have got some, we pushed straight up into it at 125 ADR. We've pushed up a little bit higher. So hopefully some sellers are going to start to step in here and pull this down. I'll be getting into this one, I think, today. Yeah. So I'll be taking the next reversal alert short on this, which is going to be here. So I'll be taking that entry this afternoon. Short, as and when it happens. Where are we? You've got 2 minutes to the open. Hello, everybody. Oil prices are killing you, Jimmy. Is that because you've got a petrol car and you're not electric yet? I don't care. I don't use petrol. Well, I do use petrol, not very much, though. Yeah, oil prices, it's a buy. It's been a buy. I've been saying it's a buy for probably a couple of months now. Nothing but buy oil. It's supply and demand driven. The Saudis and the Russians have stopped supplying. Therefore, demand is causing price rise. Do not sell it. Afternoon, Mac. Amy. Too many positions at 0.05 lot size. Yeah. I mean, so you'll have to, Jimmy, you'll have to, oh, you mean powering the CAD oil? Yeah. Yeah, we'll do. We will get a pullback on oil, though. At some point, we will get a pullback on oil. And don't forget, we've got the US news coming up. That US news is going to affect the Canadian dollar as well. So we'll see. I mean, it's news week. It could be, this week's just going to be chaos. So morning, UMAC. So yeah, send me a screenshot of what you're doing with that pound CAD in Telegram, Jimmy, and I'll try and help and advise. But if you're in 7% of drawdown, you need to be doing aggressive drawdown control. Same as I'm doing with the pound US dollar. You need to get in aggressive, get that average down, and get some push. When you get some profit, start doing a bit of drawdown control. Use it to do drawdown control. Right, quickly looking at the indices. Crap, market's open. I'm short the NASDAQ already. So the DAX this morning, absolute mess. Got hedged on the DAX this morning. The opening range breakout, we broke short, we broke long. So you would have, if you were using the normal opening range breakout strategy, you would have double-ended stopped out on that. You wouldn't have had an additional entry either. It was a bit of a nightmare. You would have had a long off of that if you'd have taken continuous mode, but not great. So basically, we moved up 1R from that range, that pre-market range that I took. Literally only got 1R up. We had a bit of a sell-off down to 1R. So I took the short off literally 15 minutes before end of session in the hope that we would get a little bit of a rally, which we have. So I took an extra one, got out there and managed to bank $187. So not a great morning. But bank is a bank. It was $1,000 loss, so I'm happy with it. Let's have a quick look at these, where they're going. Sorry, a bit hectic today. I haven't even drunk my coffee. Cappuccino today. Short on the S&P, short on the NASDAQ. No break at all so far on the, these are the pre-markets, no break on the Dow at the moment. So let's have a quick look at where we're potentially going with these today. Then we'll have a look at FX and all the ADRs and stuff. So Dow. Good rejection on the Dow, look. So this is the level we identified yesterday, this area here. Yeah, we said we were looking for a push down into that yesterday, which we got on a rejection. We've just pushed down into it again and rejecting. So this area is holding fast at the moment. There's basically buyers here coming in every day. So it looks like it wants to come and do this propulsion gap. So looking long on the Dow. So upside targets on the Dow, you've got the pre-market level there and you've got yesterday's high. So that's your initial level to watch out for, yesterday's high. If we breach yesterday's high, there's nothing to stop us until we get back to origin, which is all the way up at 150 ADR. Downside, obviously last week's low, but we've kind of already tested and rejected that. So if we come back down and push that again, I don't think that will hold. So we'll be looking for a flush down to ADR today. S&P, same. Yesterday's lows holding at the minute. If we do break yesterday's low, we'll be coming down into last week's low. Upside, you're looking at yesterday's high, same as the rest, up to origin, 175 ADR. If not, we're not going to get up to there today. It's too far. And the same with the NASDAQ. We're holding this low. Looks like it wants to go long, yesterday's high, and then pushing up. So not great that I've been triggered short on these. Hedged on the S&P. Long on the Dow. Short on the NASDAQ. Bit of a mess today again. These markets, we literally went through 2 weeks of solid, beautiful breaks. Couldn't stop making money for 2 weeks. Made 50 grand in 2 weeks. And last 3 days, this week and Friday, just catastrophic. Just everything is just whipping, hedging. It's just a mess. It's weird how the market goes, but that's what it does. So yeah, crazy at the minute. I don't really want to be short. I think this is going long today. But we go with the momentum. It's got more upside than downside, I think. But we'll see. So your 5-minute opening range is just about to go in. We'll see where the 5-minute opening ranges close. But so far, we've pushed up and down on the S&P. That's your 5-minute range. Your NASDAQ 5-minute range is there. Your Dow 5-minute range is a little bit tighter and more bullish. See where we go from here. Okay, so there's your ranges in. Let's see if we get a break on this 5-minute candle. Bit jittery, isn't it? No real direction. So news this morning, obviously. We'll go through this in a bit more detail in a minute, but the CPI for the Canadian dollar, up. Not good. Not good. So looking at, we just might as well talk about this while we're waiting for this to do something. We'll come back and look at where the 5-minute break was. So Canadian CPI, inflation sitting at 3.3 is now sitting at 4. Yeah, up 0.7. So the whole purpose of doing interest rate rises is to drop inflation. We are up at 5. We are up at 5.5, and inflation is turning tail and going back up. This is not good, which means there is more pressure to put interest rates up, because this CPI figure, it may be when CPI changes direction, it comes down. And just like market structure, it moves like this. Yeah, so you get pushes and you get areas where it doesn't. And then you get pushes in areas where it doesn't, because it's always lagging behind what has been done with interest rate rises. As you can see, Canadians did not put their interest rates up last time. US did not put their interest rates up last time. Therefore, inflation is going up. So this is incredibly stubborn inflation. You do not put your interest rates up for 1 month, and it goes, nah, we're going up again. So this is potentially inflationary for interest rates. We may have another rate increase. Canadian dollar's got a little bit of wiggle room. US dollar's getting to points where we don't want to be doing that. So Fed tomorrow could be an interesting conversation now that the Canadians got up, because that would be an indication of potentially getting a second CPI rise on the US dollar in the coming months. So not good. There's not been a massive amount of other news this morning. It's been fairly flat. We had a little bit of the Eurozone inflation came in pretty much on target year on year. We knew that was going to happen because of the German. But we've had some OECD news coming out, which is basically just to do with GDP forecasting and that sort of stuff, which doesn't pay much attention to. Other than that, there wasn't really any other news. We had a little bit of talking head news coming out of Europe. Oh, it's just happening now. Oh no, that was half an hour ago. There hasn't been any news for half an hour. So it wasn't talking head, sorry. It was bond purchase settlements. So yeah, nothing much else really to look at on the news. There's no more news today. This afternoon, we're totally flat. So next news we've got is the CPI figure tomorrow for the pound. That is forecast to come out at 7 off of a 6.8. After what we've just seen from the Canadians, pretty much guarantee that that is going to go up. So that's going to jump up to a plus 0.2, plus 0.4 potentially, which again is going in line with this. Yeah, we are up at 5.25 interest rates. That's going the wrong way. we can't let that go any higher. They've got to do something about this. So it looks like we may be stuck in this inflationary period of creeping interest rates up for maybe the rest of this year. We need some guidance from the Fed and from Bank of England and everybody. Basically, they're just not giving us enough information. So, but yeah, we will see. No movement yet on the indices. Trying to push down on the NASDAQ. Dow's putting a lower low and a lower high, but not really any movement. S&P is a double top, higher low. Not doing anything, is it? Why do I sound like this every day? It's not doing anything. I must have to just get a recording of myself so I can press a button and go, it's not doing anything, is it? Everything we look at, it's not doing anything. It's not moving. Can't make any money. Story of my life at the moment. Dev, I'm bearish on gold following US data release. Building permits. That's got nothing to do with gold. You do know that gold is just a US dollar cross, Dev. Yeah. If you're taking intraday trades, that's fine. But don't take any trades that you're expecting to do anything over the next 48 hours. You've got more news coming out over the next 48 hours than you'll see in an entire quarter. So that US dollar will completely shift direction tomorrow, or it will just power up, or it will sit there and it'll do nothing but a whipsaw. We don't know what it's going to do, but you can't take any speculative trades ahead of FOMC. Otherwise, you're just gambling, which is nothing wrong with it. You can gamble, but flip a coin. Is oil and NG the same? No, oil and natural gas are different commodities. Natural gas is quite thinly traded. Natural gas. It's natural gas. There's a lot more producers basically, and there's a lot. There's not less demand, but demand is more stable for natural gas. Oil demand fluctuates dramatically, and at the moment is in decline, or trying to go into decline based on obviously electric cars and our move from fossil fuels, basically. Why is my buy stop not triggering? Traded above it. Literally. I don't quite know what to say. That just clearly traded miles above my buy stop, and it hasn't triggered my order. And now they've frozen my terminal. Oh, God. Sorry, bear with me one sec. Let me just open another account. I've only got one terminal open at the moment, so whoa. Okay. So NASDAQ just traded up and it's completely reversed. So I've just been whipsawed into a hedge on that. That's actually down here again now. And we're flipping short. I'm going to get hedged on all three of these today. This is going to be a nightmare. This market at the minute is driving me nuts. Afternoon, Mac. Afternoon, Amy. Too many positions at 0.05. Yeah, we'll have a look at that. Pound the CAD. Blah, blah, blah. Sorry, I'm going way back on the chat. I'm going through stuff I've already talked about. Afternoon, Crom. Entered today on the Euro CAD, but just realized we had a 1 ADR bullish retracement 2 days ago. That maybe increases the chance of it to continue going down. No idea. What happened 2 days ago has got nothing to do with what's happened today. Today, the Canadian dollar has had lots of positive news. Therefore, Euro CAD's coming down. What happens back here doesn't affect what's happening today. Today is different news, totally different market. But we have pulled back. We didn't test that propulsion gap or that previous resistance. So, but this thing at the minute, it's difficult to tell what's going to happen with this Euro CAD because obviously the Canadian dollar news we've just had is bullish, but doesn't mean that we're necessarily going to continue this run. They're going to wait for FOMC tomorrow. Right, now I've triggered that order. Something really dodgy going on with that terminal and that account. That was weird. I've not seen that happen before. Basically, we got up to there and it was almost as if as soon as we got there, they decided, actually, we're not going to take any more orders, but we'll still paint the chart price. Really weird. Not going anywhere. We're 20 minutes into this market. We haven't moved yet. So, but it looks like it wants to break high. So see if we can get a break. I'll watch it over here and I'll update us as we go. Right. Let's look at the FX stuff. So yeah, if you need to wait for the next position trading, Andres, is all about scaling in. Yeah. So we're going long because we hope it's going to go up. We don't know where it's going to go. And in this particular instance, it just went sideways for 2 days and now it's going down. So we'll take an additional position, average in, and wait until it does go up. And if it doesn't happen, it pushes down. We average in, move our position, wait for it to go up, because it cannot continue to go down. Otherwise, the banks can't make any money. So it's just a waiting game, basically, which is what trading is. It's being patient, sitting here, waiting for the market to go in the direction you want it to go in, because it will do that, but you can't say when. It'll do it when it's ready. However, obviously, the fundamentals at the moment are not looking good for the euro, and I've just got better for the CAD. So I would be looking at levels of support, which on this, really, you're looking down here in this propulsion gap. So where we are right now, you're sitting on this double bottom. Yeah, so this is where they started the move. They pushed into propulsion, bought it, pushed back into propulsion, bought it, pushed back into propulsion, bought it, and then managed to push away. So where we are right now is basically where they started this move, which pushed up, which was that retracement. So this area here, this whole area, basically, you're going to find there's going to be buyers sitting ready in this area. So hopefully we'll just get a load of limit orders trigger off of this low at 150 ADR and then push up from there. Do you think CAD Swiss is a runaway? Depends what your class is a runaway. I've got 2 positions on it and it's going up. So it's not running away for me yet, but it's already run away, isn't it? It's been running away for 2 weeks. Left. Waved it goodbye. It's run. Oh, look at these wicks on the NASDAQ. Criminal. Wicks to the downside, wicks to the upside, tight little bodies, not going anywhere. Look at these bodies on these candles. Look at these wicks. This market is totally indecision today. Indecision? Undecisive. Afternoon, Jessica. Just got into CAD yen. Super extended on the RSI. Yep. CAD yen. Yep, just got my first position on that. We've just had the 5-minute reversal alert trigger. So there's my entry. 5-minute MR. Looking for a push down in CAD yen. Okay, CAD yen in. I had 0.6% in profit this morning, and I am now in 0.21 because I've had to do drawdown control. This is not fun. But hey, who said it was going to be fun? So yeah, really nice extension on the hourly. We're up above the 80 level. So very, very high extension. Last time we got there was there, pop. We got there, pop. We got there, pop. Micro pop. But yeah, so looking for a pullback on this leg. We haven't had any profit take on that leg yet. So we're looking for a good 38 to 50 retracement on that. So from there, we're looking for a pullback somewhere into the 38 to 50 area. So down to there somewhere. So I'm going to put my TP in that accumulation, which is about 0.35%, somewhere around there. Right. So seeing as this isn't actually doing anything or going anywhere today, we'll go through the FX pairs. So ADRs, there's lots of ADRs to look at today. Aussie dollar yen is the first one. So hit to the upside. So you can see, obviously, with these ADRs, there's lots of yens. We've got the CAD yen, we've got the Aussie yen, we've got the New Zealand yen as well. So there's 3 of them that have hit. New Zealand dollar was weak this morning. Aussie dollar and New Zealand dollar both had a little bit of strength. So we've got a nice big push up on these two. So big extension there. It's only just above the 70, but big extension on RSI. We're up to 150% of RSI, sorry, ADR. This is the high that I identified previously, which we've tapped straight into and rejected off of, but it seems to be pushing a little bit more. So we'll see what happens. But you've had your reversal alert on it at that resistance. There's your M pattern reversal, and it's pushing back for another leg. So hopefully market structure, and this is going to be a high, low, lower high, lower low, lower high, and push down from there. So that looks good. New Zealand dollar yen, Aussie dollar yen, pretty much the same thing. We've just had the initial reversal alert, and this is the retest now. So that's looking good as well. Aussie dollar yen. So those two both extended. CAD yen we know about. This is to do with the news. Just got first entry on this one. TP, as I say, is just down there. So we'll wait and see what happens with this. But nice big push. So looking for a pullback. Been watching yesterday's high, potentially for an exit down there as well. So that's extended. CAD Swiss. I've got one drawdown control done on this. I've only got 2 positions on this. So first position was taken last Thursday. We've moved 1.5 ADR since last Thursday, but as you can see, pretty much all of that has been today. So straight up 1.5 ADR out of the first position with a third. Average is down here just beyond ADR now. So still looking for a push back down. This US dollar yen, as you can see, they are not making any progress at the moment. We are properly stuck at that 147 to 148 level. They're not letting it through. They're worried about Japanese intervention, and quite rightly so. However, all the other pairs have been taking advantage of the move. So Aussie yen, new highs, CAD yen, new highs, Swiss yen. That one didn't. Neither did the euro. And the New Zealand dollar yen that's pushed up. Pound yen hasn't as we either, because that one's dropping at the moment. So with this, it's all CAD related. It's nothing to do with the US dollar. It's not really much to do with the yen. So just normal price action, but we've had an entire week's worth of movement to the upside, and we're continuing it this week. So that was last week. This week, we've had 2 up days. So it's still going. So we've had 1, 2, 3, 4, 5, 6, 7 up days on the trot. They're going to want to do a profit take move on this at some point. So looks good for shorts. Nicely extended today there. You're also extended on RSI. Fully extended over the 80 level, over the 80 level on the 4 hour as well. So that's a really good extension. We've got the Euro CAD as well. So that's big extension to the downside. First entry on that one again last Thursday. Looking to get into a second today. 80, 94. What? 94 times 75 equals 70. So I need a minimum of 70 pips. That's 80. So as long as we get a decent reversal alert that doesn't like close up here somewhere, as long as it closes somewhere around there in that propulsion gap, which it should do, I'll get a second entry on that, and then looking for a push up on Euro CAD. So waiting for this Canadian dollar to weaken. But I think today, based off of those inflation figures, we could have a decent move on this CAD. Market seems to be selling off. We are going to the downside. Well, trying. I say we're going. NASDAQ's broken to the downside. S&P still hasn't broken the low of the session, and the Dow, not interested. We've got some sellers on board, but they're not convincing, do they? So this is the low from 2 weeks ago that we're tapping into here. So they're buying that level up. Again, not convincing. We'll give that another 10 minutes or so and have a look at it. So EuroCAD's extended, Pound CAD also extended, as you can imagine. This is a news event, so I've done a drawdown control on that one. One entry there. Second entry was taken today. We had a reverse alert just before the news, and then obviously the news is pushed down. So second entry on that one. We're coming off this support. So this Pound CAD we looked at this morning. We've got this support area on the Pound CAD we've been looking at. So it's this area here, which we got an initial bounce at. And then this area here, which is where we are right now. And then we've got this area down here. So that high, that low, that low. At 150 ADR, there's a backup support. But as you can see, this thing hasn't stopped. Since we started this move from here, we have not stopped. So we're going to get a lovely big profit take off of this. Equivalent to that upward move, down, that downward move, back up again. Yeah. Big push up, pull back. Big push up, pull back, big push down, pull back. Yeah, so we're just waiting for the buyers to step in. If they're not stepping in there, hopefully we're going to get them stepping in there. Let me just draw that one on. It's that area there, somewhere around there. We'll be looking 150 ADR, hopefully. That's Pound CAD. That's an ADR extension as well, obviously. So we're looking at ADRs at the moment. So that's straight off of ADR, look. There's ADR, straight into ADR, straight off of ADR. There's the reversal alert. Just got into another long there. There you go. So we go. New Zealand dollar Swiss, hopefully. Extended to the upside. We've been hovering around this morning since we hit this one. Not really going anywhere. So it's kind of got a little bit stuck. We've just made a new high. We've been making gradual new highs since we hit ADR. So we hit ADR there. We got the reversal alert there. Then we made a new high. Then we got another reversal alert there. Then we made a new high. We haven't had a reversal alert for that one. So this will be the next entry. But as you can see, all three of these reversal alerts pretty much in the same spot. So we're just in an accumulation. Looking for that one to come down. New Zealand dollar Swiss. New Zealand dollar yen extended to the upside. That's an ADR. We looked at this one already. Yeah, so continuation short on that. New Zealand dollar, US dollar, that's hit ADR as well. So we've had the reversal alert on that one. There. So we pushed up. So this was ADR here. So we pushed up, hit it, didn't get any reversal, pushed up, made a new high, didn't get a reversal alert, pushed up. That's the first reversal alert. And obviously you got a nice little drop on that one. So you've had 13 pips out of it. 23 is half an ADR. So you wouldn't have taken profit on that yet, really. It's not far enough. And US dollar CAD is the other one. So US dollar CAD, I'm out of. So I just got out of this one today. Again, been in it for a while. I posted this in Telegram just before it came on. So this was a bit of a mess. As a lot of trades have been over the last couple of months. But so nice little profit on that move, nice little profit on that move. Those three together, nice little profit, but scaled out of quite a bit on this. So I'd probably come out of the US dollar CAD, I would imagine, about a break even, maybe ever so slightly down by 0.5%, 1%, something. But I'm out and I'm flat. So I'm happy I'm out and I'm flat because it's taken forever to get out of this thing. But this has really been pushed by the Canadian dollar. It's not the US dollar dropping. This is the Canadian dollar rallying off the back of oil that's caused this downward movement. So you are nicely extended on RSI today, but bear in mind that is off the back of that inflation news. So you're about to get a reversal alert on this. We haven't seen the same movement off of inflation and interest rates that we have normally expected over the past sort of 6 months to a year. So the last couple of inflation figures and the last couple of interest rate figures we've had have not done what we expect. Today, this has done exactly what we would expect off of an inflation figure. We would expect the Canadian dollar to rally. We expected the euro to rally off of a rate increase that wasn't expected. That collapsed. So I can see this getting undone. So there is a potential reversal here, but it's a little bit more risky because obviously we've had fundamental news to say that the Canadian dollar inflation is going up. Whether or not that is going to mean they are going to put interest rates up again, we will have to wait and see. The problem with the Canadian announcement for CPI is we've got no press conference at all coming. So unless we get something coming out of the Bank of Canada to give us some kind of guidance moving forward, we're not going to actually know whether or not they are planning to have another rate hike. I suspect they will wait for FOMC tomorrow, see what the Fed does, and see if the Fed come out as hawkish or not. So if it's bullish for the US, the Canadians will probably follow suit. If the US decide not to, the Canadians will probably decide not to, because they tend to follow the US. So I think there's a good chance that we might get this undone today, this whole move. EuroCAD, RSI alert, just because we've got FOMC tomorrow. So we could well be back up here before 7 o'clock tomorrow evening, before FOMC is released. We'll see what happens. Afternoon, Hamza. Broken to the downside on the indices. So NASDAQ's broken to the downside. That's interesting. I didn't get triggered on the long. Bizarre, isn't it? Broker to broker. The difference between different brokers. Look, I didn't get triggered on this on the NASDAQ. It didn't trigger a long order. It triggered a short only. Yeah. Same broker, different account type. Triggered short only, triggered long and short. Bizarre, isn't it? Hedged across the board now. So I'm hedged on all three indices. So NASDAQ. So on all of these, I'm using a 5R target. So basically now what I'll be doing is watching price action. I'm not going to get 5R on the Dow. That's way beyond ADR. So the Dow, well, so that's all the ADRs done. I'll look at the RSI extensions in a minute because we've got quite a few RSI extensions to look at. They're pretty much the same thing. So the Dow Jones, we are out of that weekly low now and collapsing down. So we've got three levels to look at. This is last week's, 2 weeks ago's low. We've got two other levels in between that. That one is pretty much ADR. So I'll be watching ADR potentially for some kind of bounce. Failing that, we'll be looking somewhere down at 125 ADR. And 125 ADR is around about 34,306. Which is this level here. So that level there is that previous week's low. That is last week's low at ADR. So I'll be watching that level for limit orders and that level for limit orders. My target is outside of those two levels. So I'm going to bring target up to 4R and hope that we could get through last week's low and break down into there and bounce. That's going to take us beyond ADR. So it's going to need a big push on the Dow today. NASDAQ, ADR low is 5R, so I can reach that. ADR low is 5R on the S&P as well, so I can reach that. So we'll see where we go, but this is selling off pretty hard today. Eventually, after it actually got going. I put an aggressive drawdown control on CAD Swiss. Stop at 175 ADR above the weekly resistance. CAD Swiss. Yeah. I mean, there's a couple of levels. When you've got an accumulation like this here, there's a number of levels up here in this propulsion gap here. So we got that level there, which is here. We've got this level here. We've got these levels here, which is basically where the propulsion gap kind of started here. So you've got that and that, which is 225 ADR, 200 to 225 ADR. So that 175 ADR is kind of the top of this accumulation. So I would say if you've got an aggressive drawdown control position on this, just give it a little bit of breathing room in case we do an M pattern like that. So yeah, somewhere above 175, but that is kind of your level. So you need to look at what the cost of putting your stop there is as a percentage, and what the cost of putting your stop there is as a percentage. Say that's 1% stop out there, and that is 1.5% stop out. I would rather take that extra 0.5% loss and give it half an ADR's breathing room in case it just does that. And then we're waiting for tomorrow for a pullback. Yeah. If you put a too tight stop on, you will get stopped out potentially. So it's up to you. It depends what your risk is. I'm comfortable with about a 1%, 1.5% on an aggressive drawdown control position. I don't like to go much more than that. But that looks pretty decent. I mean, we're 150 ADR. Yeah, I mean, the odds of going above that are like 10%. So, but it is a fundamental news event. So there is a good chance it could do. We'll see. A weird cup I've picked today. Got magic mushrooms all over the place. Not that they're magic, they're just mushrooms. Anywho, moving on. Okay, so we've broken down nicely. We're starting to find a little bit of buying pressure coming through. So be watching to see if we form inside bars. We've got a propulsion gap forming on the Dow. Looks pretty damn heavy to me at the moment, though. That Dow's not stopping. Right, ADRs. Oh, sorry, RSIs. I just want to quick look at this pound US dollar. So they sold that propulsion gap again. I've got my aggressive position on here, which is break even. So this is what I'm talking about. My stop loss down here is 1.5%. Sorry, that's 0.85% on that position, but it's 2% on the other one. So I've left that way too long, this one. The only reason I've left this long is because we've accumulated for days. And I kept removing the stop loss basically so that I didn't get spread overnight because we were just going sideways. And I've got no drawdown on anything else apart from that. So I'm happy to increase the drawdown. Normally, sort of like 3 to 4% is kind of need to start doing something. I'm happy to give this a little bit more wiggle room at the moment, just because it's the only thing I've got on drawdown control at the moment. So, but it's not looking great, is it? This is looking great. And we've made a new high. So good chance it might push up, but Need some more US dollar weakness. Right, Aussie dollar Swiss 4-hour RSI extension. This was extended. We looked at this morning. It's still extended. So we've got nice divergence going in now across this one. We are a 72 moving average bounce on the daily, potentially. So when we tend to pull back, we pull back into the 24. Yeah, and then if the 24 fails, we usually bounce off the 72, and then we either continue or we bounce off the 72 and then break structure to the upside. So good looking spot for a short at the moment. There's no real advantage to either of these two at the moment, the Aussie dollar or the Swiss. They're both equally as bad as each other at the moment. So that is nicely extended to the upside. It was nicely extended there, much nicer extended. Now we're kind of extended again after an accumulation, which could well lead to another leg up. There are tons and tons and tons of spots that we could revert at here. So it's very hard to pick a level that this is going to drop from. So it is extended, but it's only just extended, not a great entry. Aussie dollar yen is only just extended. I'd be much more interested in taking it at that double top monthly high, which is 150 ADR, if it could push up there. So that'd be a much better short to take. Good divergence again. There's divergence all over the place at the moment. Yeah, so bearish divergence on the Aussie dollar yen. The two big ones, CAD Swiss. This is extended to, obviously, extremes. We're 150 ADR on the day. We are hugely extended. We've got massive bearish divergence off the back of this news. Extended on the 4-hour RSI, extended on the hourly RSI. It's just stretched to death at the moment, this thing. It's, you know, and it's kind of accelerating away. Look, it's going parabolic. So it got extended, moved very fast, got a bit more extended, had a rest, pushed again. So there's got to be a profit take on this move at some point. This is where I would expect us to come back down into. So this is where we tested. We broke out of that monthly high. We came back down. We retested it 3 times, and then we rallied away from it. So that's where I would expect us to come back down and find support again down at the bottom here. Potentially then we might put another leg in, but it could also break. Again, US dollar tomorrow. We need to see what happens with the US dollar and FOMC. CAD yen extended. We're up at a lovely area of resistance. We've got a beautiful reaction up here. Nice reversal alert. It's just gone in, which I'm in. So there's your M pattern. Lovely reversal. So hopefully continuation to the downside. That's a lovely area of resistance we've looked at. Yeah, so we looked at this morning. This is where we're expecting our limit orders to trigger from the sellers, which have done. We need to watch this high for signs of support. So my target to the downside, as you can see, is basically here, which is in this accumulation, which is around about that area there. So looking for a pullback just into that area, quick short, extended on the hourly and the 4-hourly. This could come down a lot more though. You know, we could, it all depends on what happens with the US dollar. If that US dollar rallies tomorrow, the Japanese are going to get in. So we'll get some big, strong moves. So if that US dollar breaks that 148 level tomorrow, US dollar yen, if we're looking up here, I will move all TPs on all yen pairs right down. Yeah, so this will move down somewhere down here. Yeah, because if you think about a 600% intervention, which is what we tend to get off of the yen, 600% on this one is 80, 160, 320, 480, 500 odd pips, somewhere down here. Yeah, so that is around about a 6 ADR move. If the yen intervenes, that's where I'm getting out. Yeah, take it when they give it. But we need to wait and see. At the moment, that US dollar isn't moving, so target is up there. Euro CAD, nice big push down to the downside. Again, absolutely exhausted. First entry on this one taken on Thursday. Second entry going in today when we get some kind of pullback. Haven't got the reversal alert yet today. It's up there. What I would actually like to see this do is push down, make a new low, then we can get the reversal alert a bit tighter. But right now, be taking a second entry on Euro CAD. When that breaks to the upside, we're extended 125 ADR. Still pushing on the CAD though, but not very strong. Yeah, that was the move. We haven't got a massive amount of follow through at the moment. Dow Jones is still dropping. The S&P and the NASDAQ are stalling out. So a little bit of a flag forming, and that's still dropping. Euro CAD, pound odd, extended to the downside. First entry on that one again last Friday. I got into that one just sideways. We've had one move down on the pound today, not going anywhere. So stuck at the minute on that one, but there's only one entry on. So that was a 4-hour extension back there. So we had a 4-hour extension Thursday, Friday last week. Sorry. 4-hour extension Thursday, Friday last week. And then we had an hourly extension as well. So that was an entry H1 RSI extension M5 reversal alert. Looking for it to push up into this high, back into this propulsion gap. So far, that's all we got. Pound CAD, huge extension, 4-hour and hourly. So this is a real melter. The 4-hour RSI extension triggered, depending on what you're using, whether you're using 25, 30 or 20, you either triggered on it here, here, or here. So the hourly triggered here. So I've got 2 positions on that one at the moment. We're still coming down. We've hit ADR today, but this whole move from there, or there, or there, depending on where you want to measure your fib from, this whole move from here needs a take. So we haven't had a profit take on that entire thing yet. So there will be a big move coming on this, but we need Bailey to rally the pound. We need something to give that kickstart. And as it so happens, tomorrow we have CPI. So we are forecast to increase. If we get a 7, there's a good chance we're going to see a rally on the pound. If we get a 7.1 or more, we're going to get a massive ADR move on the pound. So the pound is, in theory, going up tomorrow regardless. However, we could get a 6.8 or a 6.9. And if that's the case, after that CPI increase on the Canadian dollar, you can probably kiss pound CAD goodbye. So we'll see what happens tomorrow, but we're waiting for some positive news on the pound at the minute. Pound New Zealand extended on the 4-hour, so that's nicely extended down to the 20. Again, divergence absolutely everywhere at the moment. Just getting pushed and pushed and pushed and not really getting any traction in the opposite direction, mainly because this US dollar news has just been constant and everything's been driving out of it into the US dollar. So yeah, everything's dropping at the minute from the pound's perspective anyway. So all coming down, everything pound basically, until hopefully tomorrow morning, positive CPI figures on the forecast. And US dollar CAD, again, massive extension to the downside, been short on that for a while. So there's the profit take. It's the most horrible, ugly looking profit take in the world, but it is there. So there's your move, 50% retracement. We're coming down to 61.8. So this has legs to do that next if it wants to, but they will decide tomorrow what they're going to do. There you go. There's your RSIs. Lots of those as well. Lots of extensions, lots of opportunities to get into RSIs as well. We're pushing back up on the NASDAQ. S&P stalled and the Dow still coming down. So tricky. 15 minutes sideways. So that S&P has just kissed that 2-week low. They've bought that. After this rejection and this speed of this move, I get the feeling that we're looking at that today. A little bit more down move. So I'll be looking still for opportunities to sell this lot. See. Tricky. Anybody got any other pairs they want to look at or anything else you want to have a look at, discuss? Ooh. Cold cappuccino. Good support bounce going on at the moment on Pound US. See if that holds. Have you got anything else I want to have a look at? No more news this afternoon. How is the H1M5 doing against the ADR strategy? Nowhere near as good. ADR strategy is absolutely killing it at the moment. ADR reversals have done 14% this month so far. Ooh, look at that. CAD Swiss. So it's really stuck in CAD Swiss at the minute in big drawdown. Big drawdown on that. Stuck. This is the disadvantage of the ADR reversal strategy. You are getting in not necessarily after the market's made a push. So you tend to get a little bit more squeezed when it wants to squeeze. So, but yeah, it's done 14% this month. It was 2 days ago in about 3 or 4% of drawdown, but now it's in 12% because of that CAD Swiss push, which will undo. Yeah, I mean, it's been doing drawdown control as well. It's done 2% drawdown control on that over the last 48 hours. So just slowing the rate of drawdown on it as it goes. We will be getting another position on that as well today, I think. The distance between trades is 20. That's going to be 26. So yeah. So this is going to trigger when that reversal alert kicks in. We're going to trigger another entry on that so that we can get out of that when it drops. But H1 obviously isn't doing a lot this month at all. Hedging is the one. I've said this before. You know, this hedging set file. We've done 25% so far this month. It's always banking 20-30% a month, 15% to 30% a month. This banks pretty much every month. But if you can stand I just can't stand the drawdown. It's just out of my nature to sit in 25% of drawdown on the account. If it was a small account, I probably wouldn't mind so much. But if you're trading a big account and it's your only account, not really, not for me. But a lot of people are trading this and having a lovely time. Yeah, this is the H1 hedging set file. 25%. Did 20 something percent last month. But as I say, it's always in 20 odd 30% of drawdown. It's just where it lives. 10%. Always in drawdown. But all the other strategies this month, pretty much flat because all we've had all month is sideways movement. You know, it's DD control being done at the moment because we've had the Canadian dollar push, but that will all get undone. So it's just sitting in stuff at the minute. It's not good. It's not a good month for position trading. It's terrible. September, August, last month I did 7%. Which is way below normal. And this month looks like it's going to be a break-even month at the moment. But I haven't, as I said, I've been saying all along this week, I have not experienced this sideways movement. You know, this market is just stuck. Just not. It's just, you know, we don't get this much sideways usually. You know, on an hourly chart, when you look at this on a higher time frame, it's just, you know, where are we? August. August, September. It's just side. Mind you, this is sideways anyway, Euro, but yeah, it's tricky, very tricky at the minute. Euro Swiss is a good example. Look, so we haven't gone anywhere since July. All of August, all of September so far, we're just stuck. No movement. No. This is what we're used to. Movement. Yeah, we're just not. I'm getting it. It'll come. Tom, my H1M5 has done 8% this month. Good job. Doing better than me. Euro Swiss. Oh, I'm on Euro Swiss. There you go. Well, Euro Swiss is going nowhere. Prime example. Last month's high and low. Previous month's high and low. Last month's high and low. This month's high and low so far. Yeah. 2 months ago. Last month. This month. Yeah. Just something's got to give. And I've got a feeling it's going to be FOMC. We'll see. In fact, saying that, I'm not actually sure it is going to be FOMC. After what we've just seen today with the CAD and what we've got forecast for the pound and what's happening with the US dollar, you know, this market is hanging on for them to give us some kind of forward guidance as to whether they're going to stop or drop. I just don't see that at the moment, not with inflation going up. I just don't see they're going to do that. So I've got a feeling we might be sitting in this sort of market for a bit, which is going to be a very tough thing to do, but we'll see. CAD Swiss is my first real squeeze. Welcome to position trading. Next week, AZ, when this is down here, you'll be going, oof, I don't like getting squeezed, and you'll be out. So don't panic. This is looking good for an aggressive today. Right now. We break that low and get that reversal alert. That's a beautiful M pattern. At 150 ADR. Good reversal. David, I've actually had some success this month position trading, but I changed my RSI from 14 to 10. Is that on the hourly or the 4 hourly, David? And you're only trend trading. Yeah, well, you will have done well in trend trading. 10's a little tight. But I mean, I said this morning or yesterday, I can't remember. Trouble with streaming twice a day is you can never remember what day or what session you actually said something. But I think it was yesterday afternoon, actually. Switching this over to a more sensitive level like the 14 is going to give us a lot more positions. The problem with doing it is, and the reason I haven't done it, is because we are coming out of summer trading into what I'm expecting to be high volatility. The problem is we're not getting high volatility. The difficulty with switching your RSI down or moving up to a more sensitive level, why don't you let me click, is the moment you do that and go, yes, okay, brilliant, we would have had a lot more entries. You take one, and that is when the volatility returns and the market expands. And you've just got in on a far too sensitive instrument in a period of high volatility where the market takes off. And what you actually do is you get yourself into multiple squeezes a lot earlier. So I'm reluctant to move the RSI into a more sensitive level, because typically we would expect volatility to pick up. I've never sat through a period in September, though. Don't think I've ever sat on the 19th of September going, when is summer trading going to end? It doesn't look like it when you look at things like this, does it? But the CAD is an anomaly at the moment because it's being driven by oil. Whereas everything else you look at that is not related to that, we are seeing multiple week accumulations and multiple day accumulations. 3 days sideways, 2 weeks sideways, 3 days sideways, and all you're getting is 1 day of craziness, multiple days of sideways, 1 day of craziness. There's no market structure anywhere. It's just not appearing. So if you adjust your RSI to say, right, I need to get more entries, that is when everything takes off and you'll suddenly be squeezed on everything. That's the danger. It might be the right thing to do. If it's the wrong thing to do, though, you will be in all sorts of pain. So, and a 10, a 10 is twice as sensitive. Look at the entries you would have had on the 10. You'd have had a short there. You'd have had a short there, which wouldn't have worked, which you'd have had to scale into for 1, 2, 3, 8 days to get out. It's not that bad, is it? You'd have had a long there, which you'd still be in now. This is the danger, you see, with using a 10. You'd have gone long there. You would have scaled in. You would have got out there, actually. ADR 134. You would have got out of that. So you'd have been in there. You'd have scaled in there. You'd have been out on that. You would have got in long there. Perfect. You'd have got in long short there, as I did anyway, and out. Might have taken that. If not, you definitely took that, and you're still in that. You could have taken that short, but you wouldn't have, because you'd have been in it long. So you're in day 1, 2, 3, 4, 5, 6, 7 on that. Whereas I'm in here in nothing. You are in 4 positions. I'm in 1. That's the difference between the 10 and the 21. Yeah. So you see what the danger is. And this is a quiet market. You'd have been in 4 positions. I'm in 1 position while we're quiet. Imagine what's going to happen if the volatility picks up. You could be in far, far, far too early. So horses for courses. It's dangerous, but equally it could work as well. It's always worth back testing this sort of stuff. See this move here. Look, this was a push Euro Swiss, 5 positions from that entry there. Yeah, so that was my first entry. Look at what would have happened if you'd have been using the 10. Your entry would have been there. There. You'd have been out on that. You'd have been in there. Might have been out on that. But you see, you would have entered there. I started the position there, and it was a squeeze. So you're in 7 positions on that instead of 5. Just makes everything a little bit more higher drawdown, a little bit more higher drawdown control, which this is why I use a 21. I've tested it all. This seems to be the one to use on the hourly, but conditions change. If this keeps going like this for another month, I'm not going to have any choice but to move the RSI, because you've got to make money. So I'm not quite ready to do it yet. I'm waiting for this volatility. It's coming. It's coming. Better be coming. Lovely hold on the pound. Propulsion gap held. Buyers stepping back in. We're still pushing down on the indices. DAX has just made a new low of the day. Just. All the US indices still pushing. The other thing you can also do as well is, use the directional bias scorecard. And like you said, David, only take trend trades, or whoever it was. Was it David? Yeah, trend trading. You could just take trades in line with the bias scorecard. But to be honest, I wouldn't pay too much attention to this bias scorecard at the moment, because we're not getting the market driving in the usual direction that we would expect the fundamentals to drive. We do not usually get an increase on interest rates that was unplanned, making something move 150 ADR in the opposite direction. So where that is a +1 on the euro, certainly didn't +1, did it, when the interest rate rise happened? So I wouldn't pay too much attention to that. You're probably better off paying more attention to the combined intraday sentiment, which lines up COT with retail, and just maybe trade in line with what these are telling you to trade. Forget fundamentals for the minute, because it doesn't look like the fundamentals are doing anywhere near as much as normal, does it? It's a pain in the backside. I was using 14 RSI at the start of the month, and I got into way more positions. Yeah, you will do. That's what I normally do in summer trading. What I will normally do is move the RSI down to a 14. So basically, just what you're looking to do in summer trading, because you're contracted, you'll find that you'll still get the odd ADR, but you won't get many RSI extensions. So when you're in a contracted market, you increase the sensitivity of your instruments, which obviously gets you more signals for extension. It's when you turn it off, that's the hard thing. So normally it's the beginning of September. This August, I was in enough positions that I never needed to do it. So I was waiting for a period where I wasn't getting any signals, or I was getting flat too quick, and it didn't happen. And I still managed to make 7%. So I didn't do it. So 10, I think, is a bit too much. Easy. So I was in on 4 positions and then put in an aggressive at 1%. That you're talking about the CAD Swiss, aren't you? Well, it's not the number of positions, AZ. Yeah, that's not what designates when you do aggressive drawdown control. What designates when you do aggressive drawdown control is when you are uncomfortable in the position. How much drawdown are you in? Yeah. So if you're in 4 positions, look at my portfolio here. I'm in 4 positions on Aussie US. I'm in 0.36% of drawdown. I'm not uncomfortable. I'm not even looking at it. It's not even on my radar. Yeah. If I was in 4 positions and I was in 2.5% of drawdown, I would be looking to get into aggressive drawdown control. Yeah. Because it's not to do with the position count. It's to do with how much your account is being drawn into. That's what is the important thing. You only execute aggressive drawdown control when you have got a position that you are uncomfortable in, you are getting out of control in, and you need to do something about it. Bring that average down a lot closer to where it should be. So whether you made the right decision on the CAD Swiss, I don't know, because I don't know what your drawdown is. But if 4 positions was getting you into 3-4% of drawdown, that's the right decision to make. So, and judging by the price action, I think you may be spot on. However, it would be much nicer if we did get that reverse alert and confirm that structure. We will see. It may well just accumulate here, though. Tomorrow is going to be tricky because it's FOMC. I'm not quite sure what price action we'll get tomorrow. But... oh, excuse me. Yeah, those 4 positions have me in 3% of drawdown. Yeah. So 3% of drawdown is about right. But again, 3% of drawdown. I also look at the overall. There's no right or wrong. This is why I don't give any exact guidance on drawdown control. I've done lots of videos on drawdown control, giving lots of examples of different drawdown controls, different squeezes, to give people an idea. But it's all to do with your comfort level. I'm comfortable in 10 to 15% of drawdown on my account because that's just risk. I need risk on to make money. So I'm comfortable there. Sitting in 5.38% of drawdown on this account now, I'm not uncomfortable in any shape or form. That position makes up 90% of that drawdown, 80+% of that drawdown. I'm not uncomfortable in drawdown. I'm uncomfortable in that position, but I'm still not uncomfortable in drawdown because I know that tomorrow, if the Fed talk the US down, I will be out of that and that will be banked. Yeah, because I know it's one day. I just want one day of bullish movement on the pound US dollar. That's all I'm waiting for. A bull day, 150 ADR, a push, a profit take, just something to kick either pound strength or US dollar weakness. I don't care which. And I know that will be gone. Yeah. People that have been in here for months with me will have seen me sitting in 10% of drawdown, then come back on the afternoon with 3.5%, 4% banked and 1% of drawdown. It happens that fast. Yeah. Because we've been squeezed. And when you get a squeeze, the profit take undoes 50% of that squeeze like that. Same as climbing up the stairs, falling down the elevator shaft. Look at the US dollar yen. Whoops. Can't really see the climb, can you? Yeah. Go for weeks up and then bang, bang, literally undone within a week. Yeah. So we're going 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks up, 1 week down. Profit take. Squeeze the hell out of the market. Is there anybody left to take the opposite sides of our trades? No. Okay. Dump it, boys. That's what they do. That's what a profit take is. That's what we're waiting for on these in the inverse of the pound US dollar. Yeah, but this is more of a grind. I would call this a grind. This is more of a push. This is more of a move that they will profit take. This one here. That I don't think is the move. We've had a little profit take off of that. We've had a push down, a little profit take, an accumulation. Yeah, we've pushed down, we've profit taken. That move there, however, we haven't done any kind of profit take move on it. Look at where my average is. Yeah, so if you look at the move itself, which starts here, we look at a 38 to 50% retracement being a typical profit take. There's 38, there's 50, there's my average. So if we just get a shallow pullback and continuation, I'm out with plenty of profit. If we get a nice deep pullback up to the 24 and we get a bounce on the 24, assuming the pound is going to remain weak and the US dollar is going to remain strong, I'm out with a massive profit. Yeah. But all I'm waiting for is 158. Look at this. I mean, that's 150 ADR. There's my average. Look at the ADR dashboard today. Yeah. 150 ADR. 150 ADR, 125 ADR, 125 ADR. It's not difficult to do 125, 150 ADR. We just need a catalyst. We haven't got, that's what we're missing. We're just missing the catalyst at the moment because the market isn't reacting to news. But it'll come. So don't panic. If you went away on holiday for 3 days, went away for a long weekend, not a long weekend because obviously the market's shut for 2 of those, but let's say you went away on a Wednesday and then came back on the Monday, you'd be out of most of your positions on a normal week because they will push it and they will pull it. We just haven't got those pulls at the minute. That's what we're getting. Stupid push, sit sideways. Stupid push, sit sideways. We're not getting the push, pull, push, pull. But now you can do about that. That's looking good on the pound US. So market structure shift. You can see the hourly reversal alert there. So we've got the low, the high, the higher low, the higher high, the higher low. Pushing up to a higher high. Seems like a long way on the hourly chart, but when you look at the 4 hourly chart, doesn't seem far at all, does it? Look at these candles. That's a news event. News event. News event. News event. News event. Done. That's all we're waiting for, a news event. We're just not getting it, are we? Tomorrow. CPI. Fingers crossed for that tomorrow. It is forecast to go our way as well. So, you know, with the pound US I'm talking about anyway. So, right. We are pushing down still. Just missed my TP on the S&P. Right, I'm going to stick a trailer on that. I'm going to move TPs down, and I'm going to trail this. So if we continue this rally, so we got a small flag break there. If this turns into a flag break, I'll continue down and look for TP down at this level. If this pushes back up, I'll get out of the shorts and try and flip long to escape those long positions. We are down at 5R. We're down at ADR basically. So we've hit ADR. So the market is likely to find a little bit of exhaustion down here. The S&P. Hopefully. Dow. We're potentially putting in a 3-bar reversal at ADR low. And the NASDAQ, we are pulling back as well. But obviously, propulsion gaps we'll use as resistance potentially for a continuation move down. So I'll see if I can get a little bit more movement down into ADR on the NASDAQ. But I'll get out of the S&P if that pushes up any further. How is ORB V2 coming? This is it. It's still not coming because I haven't managed to have any time to do any more analysis, unfortunately. So I've got a load of analysis to do. Load of data analysis, basically. And eyeballs. So I signed up with a trading platform that I paid $500 to get a 25K account. No daily drawdown limits, 30% overall drawdown limit. Have to make 4% a month. If not, I pay $160. Don't understand that business model at all. How do they make money out of that? They're giving you a 30% drawdown on a 25K account. Yeah. So think about what they're giving you. 25,000. They're basically giving you a $7,500 account for $500. And if you don't make 4% profit on that account, which is very difficult not to do, it's very hard not to make 4% a month. You pay them $160. So for them to recoup their costs, it would take them 43 months. How's that work? Send me the company, David. That business model doesn't work in prop. Too much risk. You think so they're basically giving you the opportunity to lose them $7,500 with the possibility of recouping it in 2 years if you were to remain with them, not hit a profit target for 2 years without blowing the account. How can that possibly work as a business model? There's some catch in there somewhere. There's something in there that's going to either fail you on the account or they've royally screwed up their maths. Doesn't make sense. The whole business model of prop is to use evaluation fees to pay the profitable traders. You can't give somebody a 30% risk allocation on an account. So basically, if I was to sign up for a 100K account with that company, if it costs me $1,500 or $2,000, they're giving me $30,000. So I'm paying $2,000 for access to $30,000 worth of their funds. They're risking $30,000 on me. This is what daily drawdown limits are there for, to stop the proper risk from happening. I'll be interested to have a look at the website, but I can't make the maths work on that. So I'd have to have a look. Sounds too good to be true. And you know what? Normally, when it's too good to be true, it's too good to be true. But 60-40 split, I'll take that. They're giving me 30 grand a drawdown. I will work within 30 grand a drawdown. The company sounds like Samuel & Co. Trading. Six steps? Gain a diploma in financial trading. We offer Off-Qual approved diplomas in financial trading level 5, which is recognized as Off-Qual foundation degree equivalent to 12-week program. I like the stock photo, people. This looks like a proper prop firm, if that is their office. If that is their office. Oh, yeah, no, it is their office. Yeah, this is a proper prop firm. Powered by WordPress and WooCommerce. I've never seen these guys before, but this looks to me like a proper prop firm, like a proper. Before all the prop firms came around, this is what prop firms are. You go actually rent a desk, but it's not for $500. You normally pay a lot more than that. But yeah, I'll have a look. Peter, I went through a very good period of 4 weeks, and now I'm experiencing the opposite. Not much as of a loss because of that just drawdown control done by the EA. But floating DD is actually only 8% across the 4 strategies. So you only have to wait for it to start moving as normal. Yeah, it's just you will have periods where it will just go quiet, sideways, or you get stuck in drawdown. That's just position trading. You have to basically sit in it, unfortunately. There's nothing you can do. I was with Samuel & Co. for 2 years. They're horrible. You can't open more than 1% of risks across all of your positions. Also, you have to have a stop loss. You can't go into more than 1% of drawdown without closing. Right. There you go. So there's the too good to be true. Yeah. So they give you 30% overall drawdown, but you can only risk 1% at a time. So you can either take 1 trade at a time, or you can take 2 trades with 0.5% risk. Not very good, is it? Basically, you can't get any leverage on, is what they're saying. You can come and trade with us. We'll give you a load of cash, but you can't use it. Thanks. I can do that with my own money very easily. It's true what they state. Even for a professional trader, 5% daily drawdown is common. Absolutely. He's another Greg Secker. What, the guy that owns this place, is he? Oh, they sell trading courses. I'm not going to be nasty. Oh my God. Right, okay, here we go. Here it comes. Here comes all the money. Greg Secker. Version 2. And he funnels you through his own broker, yeah. So here, come along. Here's the too good to be true. Once you've hooked on the too good to be true, you screw up and they go, you need a trading course. Here's a trading course. Brilliant. Thanks for the $3.5 grand. Now you've done that, you're going to need a decent broker. If you want to trade with us, you need to use our broker. Bang, boom, off you go. 5 grand lighter. You haven't learned anything apart from the lesson, which is system hopping. They're just getting you into it in a different way. It's, you know, it's fine. They may have a great course. I don't know, but I've never heard of them. So either they're new or they've just been flying very much under the radar. The opposite of Greg Secker. Probably what they decided to do was set up in competition with Greg Secker, realize that they haven't got $2.5 million a month to spend on advertising. Therefore, we never heard of them. That's typically what happens when anybody tries to take on Amazon or eBay. You get squashed. Greg Secker is the Amazon and eBay of trading, isn't it? You can only use his strategies and his indicators. Really? Oh, it's sort of too restrictive, isn't it? But yeah, you're gonna have to pay. It looks like you're gonna have to pay about $3 grand to find out if you can do it. So I've contemplated getting a second job for a year and put all that into trading account so I can position trade it comfortably. Yeah. It's, I don't know. I think you'll find with companies like that, there's a futures trading company that do futures education, and they will also fund you futures, and they will give you a fairly decent chunk of capital, but you have to trade their strategy. They won't. What they're looking for is to replicate their profitable traders. So they have a group of traders that are very profitable futures traders. Basically, they're ex-bank. They train you, and it costs about $5 grand to do the training. Once you're trained, they stick you on a small account so that you can trade the strategies they've taught you. When you've proven that you can become another robot and trade those strategies successfully, they up your funding. So it is a really good way to get into a proper, what we would call a proper prop firm. But you have to trade their strategy. If you deviate from strategy, they kick you out. So you pay all that money, get to a stage where they go, no, you're not quite as good as this guy. Off you go. And that's what a trading floor is like in a bank. In a bank, you'll have about 25,000 people going for 5 jobs. There's only 5 jobs on the commercial desk, on the prop desk, 25,000 of you queuing up for it. That guy doesn't have a good month, we put that guy in. That guy has a better month than that month, that guy gets demoted. If that guy isn't as good as that guy next month, he's gone. That's how cutthroat it is. It's the same in prop. If you walk into a prop firm and you can't produce the results the guy next to you can, and there's another guy that comes on with a P&L that's better than yours, you're off. You're off. And I think these guys are very similar to that. You'll probably find it's a very nasty world, which is why I find a lot of people come out of brokerages and come out of prop. They trade their own capital because you do what the hell you like. Otherwise, you're just stuck doing what basically becoming. The reason people get into trading is to get financial freedom, to stop working for the man. You go into a prop firm, you get financial freedom working for the man. What's the point? You're just working for the man. Why not go and get a nicely high-paid job somewhere else? Doesn't make sense, does it? AZ wasted 2 years with them. Funny thing is, they know that stop loss trading doesn't work because they have a $3,000 EA which uses hedging instead of a stop loss. But they don't let you do that on the prop account. Funny that. They've probably got a lot of investors that are investing in that strategy. There's so many ways to make money in it. Unfortunately, most of the people are selling the courses. They're the ones that are making the money because they know what works and what doesn't work. Yeah, the best business to be in this industry is a brokerage. There's 2 big educators in this realm. both of them own brokerages. They teach you how to press the button because they know that every time you press the button, they make money. That's where the money is, brokerage. He's a right smart ass, is he? He told everybody to buy Boohoo. What? I don't know. Getting into weird realms today, aren't we? Still pushing down on all indices. Just going to keep riding this down, not getting out until we've got some buyers. All we're doing at the moment is flagging. So keep running it down. You should watch the Forex Challenge series on YouTube by Samuel and Co. Axia, yeah. So Axia, Paolo, is who I was referring to earlier. The futures company. I've been there and done everything in this industry over the 15 years. So there's not a lot you can throw at me that I can't say, yeah, that's their business model. That's their business model. Because I've seen all the business models out there. This is why I don't do anything but what I do, because everything you try and do in this industry, if you haven't got your head screwed on, is just designed to extract money from your bank account. Not nice. I've looked everywhere. The best thing to do is just get the funds to trade yourself. Yeah. Prop firms looked really good for a while, and I'm not convinced it's over. I think we will still have a version or a definition of prop. But until this thing with my Forex funds is resolved by the CFTC, I don't think you should be buying any prop firm accounts at all, because they are all vulnerable. It literally takes 24 hours for them to disappear. So, you know, you might buy an evaluation today with Guardian Blue or whatever they're called, Blue Guardian, whatever that one is called with the castles on it. We looked at it this morning. But Friday afternoon, they'll have a message up saying, we can't trade anymore. You'll never hear from them again. So stick your money in the bank. A minute. In your own bank account, in your own prop account. Your own broker account is what I'm trying to say. And just wait. Or trade futures. But to be honest, I'm not sure that futures actually is any better. So the best, as far as I'm concerned, the best futures prop out there at the moment, and it still is Take Profit Trader. The only reason these guys are, I think, better is because they have a fixed daily drawdown rather than a variable daily drawdown based on your daily P&L run-up. They also have immediate withdrawals. So I don't think you can beat these guys for, so it's this end of day trailing drawdown. This is the big difference between companies like Apex and a lot of these other futures prop firms out there. This end of day trailing drawdown is the key to being able to make money in the futures market, because the futures market moves so fast. You could be sitting there and suddenly run up $800 and run down $800. You now don't have that anymore. You have $1,200 to play with today. With these guys, you have 2,000 from the start. If it runs up and it runs down by 800 and you close it out at break even, you've still got $2,000 worth of drawdown. This is the big difference between this firm, Take Profit Trader, and the others. As far as regulation is concerned, I don't think these guys are any safer than any other prop firm out there, regardless of whether it's CFDs or what. The only reason that people seem to think these guys are safer is because they have to be registered with the CME. But they don't register with the CME as a brokerage or anything like that. They're registered with the CME to provide you with data and allow you to access the CME data to place trades. Everything they do is done through the same systems, through Rhythmic, yeah, which can all be demo, yeah. So their business model, I'm not sure, is any different to any other business model. Environment, yeah, sim. This is funded, not real money, yeah. This is the problem with my Forex funds. They've gone, well, it's not real money. You're not giving people real money. You're telling them you are. These guys are doing exactly the same business model, telling you it's not real money, but telling you can have real money. Yeah, different profit splits, different contracts. You know, it's just too much woolly out there at the minute, even in the futures. So I'm not convinced. Is the fivers good? No. Tell me why the fivers is not the same as any other prop out there. EA, Feudalcrat. Somebody in in the Telegram group at the moment is saying they've been waiting to be paid by Feudalcrat for 4 weeks. They haven't been paid. They're not paying out. City, Fivers, all these companies. What makes them different from my Forex funds? Nothing. Is it? Think about it. None of them are regulated. Yeah. If they're using a third-party broker, at the end of the day, they are still selling you a demo account. Whether those trades are being executed on a third-party broker, which is not manipulated by them, or their own broker, which could be manipulated, at the end of the day, they're still selling you a demo account. This is what the CFTC's got a problem with. You're telling people you're going to fund them with real capital. You're not. Unless these guys can turn around and prove that they have millions and millions in capital, which is segregated money away from the money that they're taking from evaluation fees, they are breaking the rules. None of them have turned around and said that they're not doing that. None of them have turned around and said they are doing that. The companies that have turned around and said, we do fund you with real money, can't prove it. They tell you that, but they don't prove it. Prove it. No, we can't. Hang on a minute. One of your directors works on that brokerage. That brokerage is who you trade through. There's a conflict of interest. Somebody said in there, in Telegram this morning, this afternoon, can't remember who it was. John, I don't know if you're in here. John said, I'm astounded to see today how one CEO has 6 different prop firms: the Funded Trader, Fortune Trader, Skilled Funded Trader, the Funded Trader, Level Up Society, and Rocket 21, all owned by the same guy. Do you think the CFTC are going to be knocking on his door? And do you think those websites are going to last more than 24 hours when that knock happens? Do you want to be buying a proper valuation with any of those companies? Do you want to be buying a proper valuation with any of these companies? I don't know. Just all seems a bit dicey at the moment, doesn't it? Stick to your own capital. If you can't stick to your own capital, it's difficult to trade, isn't it? You need money. What about paying for prop challenges with a credit card? That's a question for your credit card company. You would have to prove that the company that you bought through your credit card has defaulted on the contract. So in that contract, it would have to say what they're doing, and they would have to do something that you can prove isn't what they said they were going to do. Talk to your credit card company. Say, I'm thinking about buying an evaluation with this firm who say they're going to fund me with something. And I'm pretty sure you won't find anybody on the other end of the phone in that credit card that isn't a lawyer that can answer that question for you. If you are paying $500 for a demo account to prove that you can trade with, and you do that and you fail the evaluation, your credit card company is not going to pay you back, because basically you've said that you're going to pay £500 for a demo account, or dollars, or whatever it is. You know, I'm not normally skeptical. I am very skeptical about everything in this industry, but I wasn't skeptical about prop because I was being paid. I am now massively skeptical. For me, if somebody has drawn a lot of money out of prop to turn around and say that is, I've lost total faith in the industry, especially after this. This is what's really put the nail in the coffin for me today. Yeah. This company, my Forex funds, who I traded with, who paid me and still owe me money, had a holding page up there saying, we're really sorry at the moment, we've had to put our business on hold because we're under CFTC investigation. Now, they have totally vanished. You cannot get in contact with them. There is no email address. There is nothing. They've been wiped off the face of the earth. Not a, we're really sorry. The CFTC investigation has proven that this business model we're operating is no longer successful. Unfortunately, you've lost your money. We can't give you anything back. Da, 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 da. Gone. Doesn't appear on Google anymore. Vanished. That's what's put the nail in the coffin for me with prop at the minute. They're gone. That's me. If you want to go and do it, go and do it. But I'm not convinced if you click on any of these websites within the next 6 weeks, they will be there. Because they all do the same thing. I know. I currently work from home, which is great for trading. Cool. I have a job offer for more pay, but I have to go to the office. Boo. I wouldn't be able to manage my position until the Asian session. All I would say to that, David, is the extra amount of money worth the freedom you get at home? That's the big question. Yeah. So if someone's paying you double, probably go and do it. If someone's paying you an extra 10% for the fact to give up all of your freedom from working at home, being able to go off and have a snack, maybe take an extra bit of half an hour or an hour at lunch, and chill out, watch some YouTube videos while the office is quiet without anybody watching over your shoulder, is that worth an extra 10% a month? Yeah, a job is got to pay the mortgage, but also you want to do a job you like. But Google charge back. Yeah, but Google charge back my Forex funds. Lots of people claimed theirs. Google charge back my Forex funds? What's that mean? Google charge back? What's that? You're paying by Google, are you, or something? Daytrade FX, Darwin. Darwin's not a prop firm. Darwin's a broker. We went through this I've been through this twice now in here. Darwin X is not a prop firm. Darwin X is a broker. The Darwin is an account you have to show 12 to 18 months worth of profitable trading to get an investment in, which they will give you a tiny fraction of. If you got a Darwin within 2 years, you would probably earn 5 or 10 grand if you're lucky. Darwin's, you've got to be a highly established investment trader, not prop. Totally different thing. No, I mean, you should Google. Oh, Google charge back my Forex funds. All right. So you got to open a dispute with your credit card company, blah, blah, blah. Charging back my Forex funds is one of the dumbest things anyone can do when the case isn't solved. If they manage to get out of it or settle beyond the fraud claims, you are going to get charged again. Yeah. The best thing to do is to wait for the class action lawsuit. So basically, if it is all proven that it was all a massive scam with my Forex funds, there will be a law firm which will set up a court case to go after the guy and get some of that 300 million back. So all you do is you stick your name down. You've got all your receipts, as long as you've kept all your emails from every evaluation you've bought from them. You just provide all the proof for your bank account, how much money you've paid to my Forex funds. You'll get the whole lot back. We've just got to wait. It will probably take 2 or 3 years, but you'll get it all back. So trying to do chargebacks through your card, you'll probably find if you do that, it will be quite hard to do through your bank. And also then what you'll find is you won't be able to take part in the class action lawsuit. I've been through one of these with Alpari FX broker. It will get sorted and you'll get your money back and you'll get everything back as well. But what you won't get back is anything you've done independently, and it will just cause more problems. So I just wait. Any money you've spent. I mean, I'm in a really good position because I've made more money out of them than I've actually paid them. So I could get double bubble. If I go for every penny I've given to my Forex funds, I'm going to get quite a nice payday. So I'm not worried. I'm just going to wait and see what happens. But we're coming off the support on the DOW at 3R. Closing out the Dow shorts. Out of S&P. NASDAQ's at 4R. Going to close that as well. And see if we can get a retracement on these. So got quite a few bull moves coming in. So we'll see if we can get some movement on these to the upside now. Right, I'll leave it there today. Nothing much banked today. As I said, this month looks like it's going to be a scratch. This pound US dollar is pulling back, unfortunately. So looking good, but not sure we're going to get any movement today. We'll see where we go. But yeah, if you say with my Forex funds, if you want to do some kind of chargeback, obviously you can do that yourself. Just Google it. Just do a bit of due diligence, though. Research and see what other people have done, because you'll probably find if you've done it for a credit card, you've probably got some coverage there, because you can say, look, I bought this from these guys, and they're not going to know what it is. They're going to turn around and go, what have you bought? Well, I bought trading accounts from them. But they've basically been sued by the CFTC and their website's been shut down. I want my money back. Yeah, so you could use that approach of being dumb and you might get it all back for the last however many years. But what you might not get back is anything you've done with a bank card. All my transactions were bank transactions. So I probably haven't got a leg to stand on. So I'm just going to wait. But go and do some due diligence on it. Go and do some research if you want to. But when the CFTC investigation is over, there will be lawsuits launched, I'm sure, if it comes back that it has all been a massive fraud. So be interesting. Right, have a good day, everybody. I will be back tomorrow morning, 7:50. I'll be keeping an eye on these indices for pullbacks and try and get out some of those. Hopefully we can end up somewhere up here so I don't get spread out on the stops today on the pound US dollar. But that's the only thing I've really got problems with at the moment. And as I say, everything else we're kind of waiting for FOMC tomorrow. So overnight news, nothing to worry about. We've got the China loans, which might affect other bits of market. We'll wait and see. But the main news tomorrow we've got is CPI tomorrow morning, and then it's total dead all day until 7 p.m. until FOMC. So tomorrow evening is the main event, but we should hopefully get some movement off of the pound in the morning. So I'll be back on at 7:50 for 8 o'clock for the Frankfurt session as normal, and then back to 2:20 tomorrow afternoon for the US session, and we'll see how we go. But yeah, hopefully going to get out of why is that stop loss not been removed. You'll get the odd glitch on this when I'm doing manual intervention, which I need to sort out. So yeah, so basically we'll see how we get on with these this afternoon. Hopefully we'll get some kind of pullback on this before it drops, if it drops any further. But we're down at ADRs, so we're ADR there, we're ADR there, and we're very close to ADR on the NASDAQ. So we should either accumulate down here, in which case then it'll be a lost day, or get a pullback, in which case I'll be able to bank it. But I'll post in Telegram what happens. And I will see you guys tomorrow. So have a good evening. Anything you need, I'll be in Telegram. And I will see you guys next session. Have a good one.